Welcome to The Tax Life. I am your host, Jeffrey White, tax professional, 30 plus years of experience in mostly financial advising, tax preparation. But now I'm on a crusade for a more holistic approach to your tax life through tax planning with strategies and tactics to provide you with tax savings that could um, bring wealth to you, your family, your children, and your children's children. So tonight, our topic of this session is the power of a tax strategy, and we're going to also talk about a principle called the immutable principle of preparation. And so tonight's topic actually came from a question that I got a few weeks ago because I've been speaking on um, the differences between tax preparation and tax planning, about tax strategies and tactics. And one of the viewers asked the question, well, what is a strategy? And in particular, she asked, what is a tax strategy? And so I said, you know what? I will definitely answer that question. And so tonight's session is about that, in particular, the power of a tax strategy, and then some principles or a principle behind that. I like to give a principle in each one of these sessions, and that principle could be for your tax life or in any of the other areas of your life. So um, that's how we like to do it here. So tonight we want to talk about tax strategy, the power of a tax strategy, and how important it could be in your tax life, and how it's really kind of unknown and a very powerful tool in your financial tool belt, if you will. And tax strategy, um, what I found out in the last few years was that a lot of people don't even know what a tax strategy is, and they don't understand how it works within the system that we have in the United States, in our tax system, and even in the state system. So we're going to delve into that tonight. The truth is, our tax system is structured in a way that it actually rewards preparation, and it penalizes passivity or waiting. And the way we were all probably taught about how our tax system works and what we are supposed to do at certain times and are compelled to do, the whole April 15th thing, let's get your taxes done, let's go to somebody and get them done, bring them your papers and have them done and prepared and comply with the law. What a lot of us were never taught was that some of the wealthy and the rich and the historically wealthy folks have been planning and strategically planning their taxes for decades, ages, in fact. So tonight, if you think about it, um, we're going to talk about strategically positioning yourself in your tax life to reward you for preparation, which is that immutable principle. And what preparation in your tax life could mean, it can mean thousands of dollars every year saved, um, which could actually change your life and your future and your children's lives and your children's life, and even people you don't know, by way of being able to contribute more to charity. So, and when I say we're talking about saving and contributing to society, we're talking about thousands of dollars that just putting a little bit more time and intentionality in your tax life could save you every year. Okay. When people hear the word strategy, most people, such as myself back in the day, would think, well, military and war and battles, and they also think about sports teams and championships and even corporate executives. So I want to talk about some definitions of strategy, because strategy is everywhere, even in our tax life. So we're going to break down first what a strategy is and what strategy is in general, and then we're going to break down what tax strategy is and give some examples of how powerful having and then utilizing a tax strategy will be in your tax life. So when we talk about strategy, I like to go back and I like to look at the root word. And the root word of strategy is strategos or strategos. And what it means, it's a Greek word and it comes from a military leader or a military war or a uh, leader of an army. And that's what, a lot of people think about that. And that's how it was defined back when it was first brought into the lexicon. So I want to give you three definitions of strategy across different timelines because, as we all know, words change over time. And the word strategy has changed and developed into different meanings over time. So let's talk about an ancient meaning or an early meaning of the word strategy. And it's more of a philosophical definition, but I'm going to read from my notes here. But strategy is the art of directing great forces, whether in war or in governance or in life, toward a desired outcome through foresight, wisdom, and calculated movement. So you can see how that actually sounds uh, military, it sounds philosophical, it even sounds spiritual in nature. But the word is rooted, again, in military and philosophical thought, um, and where strategy is seen as a way of positioning yourself and timing and putting yourself or your situation in position to take advantage and get the desired outcome that you would like. So moving forward in history, the next definition of strategy is more of a scientific definition. It deals more with a rational behavior and a more analytical way of thinking about strategy. And it says that strategy is a structured decision-making process that optimally allocates resources to achieve long-term goals while adapting to changing environments. Okay. And this definition emerged in the 19th and 20th century. And it still talks a little, it gives a little hints of military, but it also starts to think, and you can position that term, the strategy, into economics and in game theories and disciplines. And even this definition emphasizes logic, rationale, but also efficiency and adaptability. So the final definition of strategy is a more modern definition. It's a little bit more technical, and it also has a social definition, more a contemporary perspective. And it says that strategy is the intentional coordination of actions, systems, and influence to maximize efficiency, competitive advantage, and long term sustainability in a complex, interconnected world. In today's digital and global society, strategy now includes um, the military definitions, business applications also, but also social influences, technology, branding, and personal finance. And you can see how the more modern definition of strategy um, actually is applicable as we move forward in our society and starts to now should be start to be crystallized in our minds on how that actually applies to your tax life. Each of these definitions actually builds upon the previous one, showing how strategy has evolved from philosophical and even spiritual definitions and a concept to of a more structured concept, more multi-dimensional approach. Okay, I like that. And then it also integrates now human behavior and technology and systematic leverage. So you can see it's moved from more um, of a group think kind of situation, military leadership, um, um, tactical movements, to a more behavioral and individual thought process or concept that can now could be utilized and is utilized all throughout all types of systems in the world. Okay, so that's the definition of strategy. Now, how do we use strategy, or how do we define strategy in the terms of taxes? Okay, and here are a few definitions of strategy in terms of taxes, and looking at the term strategy or the concept of strategy in your tax life, and in the different ways strategy can be used and be powerful in your tax life. So first, let's look at tax strategy as a way of positioning, meaning if you're outside of a system, like maybe our tax system, or you're outside of certain laws that aren't uh, applicable to you, or you're not eligible for, how you position yourself to now be able to be inside of those laws that you now may be able to take advantage of. And it says that a tax strategy is a structured way of arranging your financial resources and your tax life to achieve the most favorable tax savings, and under the particular tax system in which you operate and you're operating in. And in our case, we in the United States, we have multiple tax systems, but the ones that we are most um, um, involved in our lives, primarily in particular, when we're talking about compliance, are going to be the federal tax system and the state tax systems. And just as an aside, the federal tax system guides the IRS, and then the state tax system guides usually the Department of Revenues for different states. And most states comply with federal law first, and then after they comply with the federal laws, the states now matriculate into having their own laws that are a little bit different for each state. And in actuality, even some states like Texas don't even have state taxes. But the idea is that your strategy has to position yourself to best take advantage of the laws that are governing you, whether they're federal or state. Okay, if a person that knows how to position himself within that tax system and utilizing the laws that are available to them, once they position themselves, then they will financially win. And it's like a chess player that plays chess, and they are in a system which is the chessboard, and they have the pieces which might be the laws, and then they always are trying to think strategically, or using those resources to put themselves in the best possibility, maybe thinking 2, 3, 10 moves ahead to beat their opponent. And in our case, I don't want to say that the government is our opponent, but I would say that paying too much on your taxes might be considered our opponent. Okay, now let's look at tax strategy in an overall framework. Okay, what we call an adaptable framework, or a model. Okay, and tax strategy in a framework of an adaptable model is dynamic, meaning that it changes, and this model will allow the taxpayers, us, to respond effectively to changing circumstances, or in this case, tax laws, while still looking forward toward the larger goal. And in our case, positioning ourselves to be able to win in the tax game, or to your tax life, and save on paying additional taxes that um, may be considered overburdening you. Okay. So tax laws change every year for federal and for state, and we have to be able to take that adaptable or dynamic framework, which is the system in which we operate, and we have to be able to be um, uh, dynamic in our movements and in our positioning. So an example is, in some years, there are certain tax laws that might work to our advantage. And then if tax laws change, or when tax laws change, those same laws that work to our advantage may not even be available for us, or we may not be eligible because thresholds might have risen, or the law in and of itself may have gone away. So we have to think of tax strategy as, again, being a dynamic thing that changes, and our tax strategy has to be adaptable within that framework or that system. Tax laws shift all the time. New deductions emerge. Your tax strategy, our tax strategy, my tax strategy, have to be able to shift and adapt through the changes that invariably will happen in tax laws, because um, even with new administrations and new governance, tax laws change to suit our society and suit the leaders of our society as well. And we, as taxpayers, um, if we do have a tax strategy, it needs to be adaptable, dynamic within the framework. Okay, and then this last definition of tax strategy, it talks about tax strategy as a system of leverage. And leverage was one of our principal words, or immutable law principal words, a few sessions ago. And leverage just really allows us to utilize a tool or a method or a system and use that system to its advantage, and move more with less, um, like a lever. And a lever might allow you to move something of a heavy weight just by moving that lever underneath the heavy weight or heavy object, and then on the other end being able to push down on that, and then that lever actually gives you the ability to move or reposition. So when we're talking about um, tax strategy as leverage, we're talking about moving or leveraging certain actions within that strategy to get exponential or extraordinary results, um, and not necessarily work reactively, but work proactively to achieve those results. Okay, so that's the third definition of tax strategy. So the right tax strategy is going to allow you to redirect income. Okay, it's going to allow you to optimize deductions. It's going to allow you to legally minimize your tax burden and allow your tax dollars to fuel your dreams, your goals, and allow you to avoid waste by giving that money to others that may not have your best interest in mind. Okay, so let's talk about tonight's immutable law or principle, and it's the law of preparation. And when I say the law of preparation, I'm not talking about tax preparation, I'm just talking about being prepared. Okay, and this principle or this law, obviously, being prepared is a good thing, and being prepared in all areas of your life probably would be a good thing. But when we're talking about your tax life, being prepared is not just an advantage, but it's a determining factor in what the end result or the outcome of your tax life is going to be. And those who prepare, they're going to thrive financially. And then those that don't prepare, they're going to just survive. And as we all know, there's a difference between thriving and surviving. And we all have a desire first to survive, but we should always have the desire to thrive, as intelligent beings. Okay? So our tax system, like the financial system at large, our tax system, like the financial system in which we work with, whether it's in the United States or Europe, it's all really about um, effort by itself is not necessarily rewarded. Okay, you can work hard, but not necessarily um, end up being wealthy or rich, but you might still work hard. And we were all taught probably that working hard is a good thing, and that you work hard and you get ahead. But uh, our systems, in economically and financially, don't just reward us for working hard. they reward us for working smart or being smart or using leverage or positioning ourselves or having a dynamic framework to move within the systems. So it rewards people that are actually prepared. Okay, the difference between say a business owner that just does their taxes and comes in and overpays their taxes, the difference between that business owner and somebody who actually legally saves thousands of dollars every year, it's not about how hard they work, but it's about how early they prepare, and then they get the results they want, which are tax savings. Okay, think about it. Now that we know what strategy is, and now that we know what tax strategy is, um, it stands to reason that a well-structured tax strategy is like um, it's like preparing for a marathon, right? And or most of us haven't even thought about running a marathon. Let's talk about a 5K, okay? And I've actually done a 5K. Um, and if you want to do well and you want to, let's say, beat your time, or you want to even earmark a time for the first time, you want to be prepared for it. We don't just go out there and, well, most of us don't just go out there and just run or walk. Or I guess you could walk it and do pretty much okay, but just go run. That would be probably not a good idea. But most of us, we kind of prepare. We might set a certain amount of weeks ahead, and we might start walking and running a certain amount of miles every day or every week. We might adjust our diet and our carbo loading and our water intake and food intake, and we prepare for that 5K in whatever manner it is. We might even get a new pair of running shoes or walking shoes, but the idea is that we prepare and we don't just go out there for the most part and just start running as fast as we can for a 5K. But we train consistently and we're prepared and we follow a diet and we're disciplined and we probably will get the desired outcome. The last 5K that I actually did, it was a combination of running and walking, and I actually did well. I thought I prepared well for it. About halfway through the 5K, I was about to pass out and had to take some deep breaths. And but the idea is that the desired outcome was finishing, and I don't think I would have made it if and got that second win if I wouldn't have prepared those weeks before. So the idea is preparation in your tax life will put you miles and miles ahead. See the pun between 5K and the miles? Okay, so yeah, they work the same way. You just gotta, if you want to do better and you want to finish the race and you want to finish well and you want to get your ribbon and you want to be able to take your spoils and give them to those less fortunate or help your family move forward. That's what the immutable law of preparation will do for you. Okay, so now let's talk about, we talked about the power of strategy as the subject today or the topic. Let's talk about 10 reasons why tax strategy is a powerful wealth tool. And I use the word wealth. I kind of hesitate to use it, but it really is a good word, and it really um, can be a word that could be applicable to us in the future, because it kind of connotes a building of something and a movement into a position that will change your lives and our lives. So the word wealth is appropriate, but even if you just use your tax savings after tax planning and tax strategies to improve your life day to day, there are ways that you can position yourself dynamically and leverage the tax system to actually improve your cash flow month to month. It's not always about waiting till the end of the tax season or compiling your money for some goal down the road. It could actually be strategically put together so that your cash flow month to month will be increased. Okay, 10 reasons why having a tax strategy is a powerful tool. Okay, for those of you and us that want to build and preserve wealth, here are these 10 reasons. You want to first, number one, ensure you structure your income in a way that reduces your tax exposure. Okay, and this would be an example of operating and positioning yourself in a dynamic framework. Number two, um, having a tax strategy allows you to benefit from every available deduction and credit. Number three, it puts you in control of tax deferral, okay, meaning that you can push a tax to another time frame with the proper positioning and leveraging through tax strategy. You can push that income or defer it, and thus reducing your taxable income within that period in which you're in, thus allowing you to receive the tax savings and then use that for future use. Um, Number four, another reason why having a tax strategy is a powerful tool, it minimizes how much income is exposed to higher tax brackets. If you remember in one of the previous sessions, we talked about tax brackets and how they work, and we'll have a whole session um, later on this year about tax brackets, how they really work, how they affect you, how you shouldn't be afraid of them, and how you can position yourself to take advantage of them or avoid them, depending on the situation. Number five, having a tax strategy lets you dictate how your income is taxed legally and efficiently, puts you in control. Okay, when you go and you just sit down in front of a tax preparer and you say, "Here, do my taxes," you you are in essence relying upon that person, and even if you do it yourself, to help you to meet your desired outcome. And that's very difficult when you are working with year old information. Number six, having a tax strategy turns your tax bill into a financial tool rather than a burden. Okay, going from a tax bill of 45,000 to 25,000, now you have a tool in the resource of that $20,000 that you saved to again be able to use that tool, which is the money, to have a reduce your tax burden and have more control over your life. Number seven, having a tax strategy allows for tax-free and tax-deferred growth of investments and retirement funds. Okay, so in that example, we're talking about things that are tax deferred, your 401ks, your IRAs, your Roth IRAs, and your 403bs. All these what I call tax favored vehicles have benefits in them from either deferring taxes because it can grow um, year to year. Your money and your investment and your capital can grow and not be taxed until you really realize that gain or pull that money out. Okay. And in some cases, you can get like a 401k or an IRA, you get the benefit of um, tax-free investments because that money that you set aside because of its tax favored treatment will not be taxed by the government. Thus, let's say if you save $6,000 and put it into your IRA and you get a tax deduction, your income, let's say, was 50,000. Now you're only going to be taxed on 44,000, and now received tax deferred income as well as um, tax-free income. Okay. Number eight, having a tax strategy prevents you from overpayment. Okay, and it ensures that you have now this money that you could utilize and effectively utilize your money versus when someone else has your money, like the government, you're not really sure what they're going to do with it. Can go into the general fund, and then that general fund could be used efficiently or it could be used not efficiently. But when you have that money, then with the proper advice, you can actually make real prudent decisions and affect your future and your again your people who you might donate to future or your children or your children's future as well. Um, and then finally, it creates intergenerational wealth, which I'll talk about all the time to your children and your children's children by preserving those assets, which are those dollars, and minimizing tax exposure. So these are 10 reasons why having a tax strategy is a powerful tool that um, you should use to have control over your tax life or some element of control over your tax life. All right. I want to give some examples of uh, tax strategy. Okay. Let's say for business owners, you're operating, you as a business owner, you need to always understand how your business is structured and make sure you're operating under the right structure at the right time of your business. And you should always be um, reviewing your business structure along with your income and your expenses to make sure that you are in the right structure at the right time and that structure is providing you the maximum efficiencies for taking advantage of tax laws. Another tax strategy would be if you're a high earner, meaning you make a lot of money, um, you would need to strategically manage how and when you receive your income. Okay, that is an actual tax strategy, because with the right planning and knowing how tax brackets work, um, you can if you're controlling how you're managing your money strategically, then you can also take advantage of certain tax brackets and know when to move money or delay money or push money forward and make that money work in the right tax bracket and work for you, which could save you thousands of dollars. Okay, another strategy. If you're a taxpayer that for whatever reason ends up with a high tax bill or what you think is a high tax bill, um, having a tax strategy like being able to leverage all your deductions that are applicable to you and utilize tax deferred investments, kind of some of the things we talked about earlier, to minimize your annual tax burden. Are you doing that? And then if you're paying over a certain amount of taxes every year, let's say if you're a higher earning person and you're paying over $30,000 in income, you're not um, using the proper or the correct tax strategy, or you're not using any tax strategies, and you're likely overpaying because of that. Okay, so those are just some examples of a tax strategy that you can employ. Okay, so let's give you another example of a tax strategy versus, well, how powerful a tax strategy could be versus just, filing taxes. Okay, so the power of a tax strategy versus filing your taxes is all about um, going back to the immutable law preparation. And in this example, this is something in our offices we experience all the time. And I'm not even going to say in tax season because our offices are open year round and we have tax clients all year round and they come to us with all types of tax lies. Okay. But we see this example a lot. We will see a client, could be a business that is a business owner. And when I say a business owner, let's go back to how the IRS views you, but they're in a category of just a business owner okay, that files taxes. And in this particular case, we have consultants, and I'll talk about one example in this story. But a gentleman named Mark, he came to us, and he was a referral. We get a lot of referrals, and he came to us, and a high earning in person, make $400,000 a year. He's in financial consulting, and believe it or not, the area of his financial consulting, um, he had never even heard about um, tax planning or tax strategies, but he was compliant. He'd make his money. He would go and he'd get his taxes done, and he but he got frustrated that his tax bill was so much. In this case, the first year he came to us, $125,000 in taxes on the business income profit of 400,000. But he thought he was doing everything right, going to his tax person. The tax person was a preparer, and I understand that. And they were doing their job preparing the taxes based on the documents that they received. When he came to us as a referral for tax preparation because he thought his tax person wasn't doing a good job, but his tax person was doing their job. It's just that there was no planning involved, there was no strategy. So we sat down again. We did a nice analysis of the previous year's taxes. We showed Mark um, where we thought he was. I don't want to say we're making a mistake, but where he wasn't utilizing the tax laws to his advantage. Um, and then we gave him what we call our initial financial personal financial questionnaire, which really touches on Mark. Hey, what do you want for the future? What do you want to do moving forward? And what could saving a certain amount of money every year, let's say, how could it help you reach your goal or your dream? Um, we put the questionnaire together along with 3 years of his tax returns, and we did an analysis. And we actually came up with a proposal for Mark. And this is what the proposal said. Okay. Mark was filing his tax return as a sole proprietor business owner. Okay. And after you reach a certain amount of income as a sole proprietor, um, profit, you start to have gaps, is what we say. You start to have gaps in your tax situation. So we saw that Mark could make one simple move in his tax life, going from a sole proprietor to an S corporation, and it saved him about $18,000 in self-employment taxes. Okay, so that was the first thing we did. Then we told Mark, hey, we noticed that even though you're a financial consultant, um, you weren't putting any money into your own um, plan for retirement. So we put together with some partners of ours a solo 401k for Mark, which he took some of his profits and put into that plan, about 58,000, and that deferred income and allowed him to start moving toward his retirement goals as well. And then we also advised him to strategically uh, purchase some business assets in that final fourth quarter of the year versus waiting to the next year. And then that accelerated some of his deductions and allowed him to save some more on his taxes. It all ended up um, that he saved around $35,000 that year. And we've been moving forward with Mark every year, and every year because of um, the dynamic nature of tax laws and the tax system. Every year, Mark's tax plan, so to speak, changes based on his desires, his goals, his um, dream, if you will. And so every year we put a new plan together for him, and we've been saving the money ever since. So that is an example of how being prepared, so to speak, can help you in leveraging what's already out there. And that is the big thing that I'm trying to one, gather attention for, which is there is a better way, and it allows you to be in control of the outcome more. I want to have people now, once they are have brought attention to this, now become intentional in creating a plan which has a strategy or strategies within it, and then within those strategies, tactics. Okay. Um, so here's some final thoughts. Tax strategy is more than just a financial tool. Really, it really is. It's a mindset. So we go from this now coming to our attention. Hey, there's a thing called tax planning. Okay. All right. So now it's come to your attention. Now the decision or the mindset has to be, how intentional do I want to be about this new information that I received, and how I want it to affect my tax life. But then you need to know also that after you make the intention or have the intentions to start um, being in more control of your tax life, there are going to be disruptions. And when I say disruption, basically there are going to be some changes. And there are going to be some changes on how you do things. There's going to be a change in your mindset. There should be a change in your mindset. And there should be, um, um, again, an intentional um, drive to control your tax life. And once that intention happens, again, there's going to be changes, which is a disruption in the way things were always done. I always did it this way, and now I have to do some things this way. But I mean, the thing that I've learned even recently is that we as human beings, we only do what we want to do. And if we don't want to do it, we don't do it. We only move forward by our motives. And so you have to, in this case, be intentional about your motives to change your tax life. Okay. And then the disruption comes. But then after disruption, and after you make this intentionality a part of, let's say, call it your system, then you become that person that becomes the individual who will plan their tax life and have some modicum of control of their tax life so that they can control the outcome. Okay. And now you become that person. And now when you become that person, you get the results, and you get to do the things that you want to do in your tax life, or in your personal life, or in your financial life, or in your charitable contribution life, or in your children's life, or in, again, your children's life. Okay. A well crafted tax strategy allows you to dictate the terms of your financial future. It also ensures that your income is working for you, not for the government. I saw this quote that I like a lot. Here it is. It says, those who fail to plan end up funding those who do. Okay? Let me repeat that. You might want to write this down. Those who fail to plan end up funding those who do. I want you to think about that for a moment. Okay? All right. So, a few final notes. Got a question. Okay? And well, first off, just want to, before we get there, I want to just give a shout out to those of you that have at least watched one of our sessions. I appreciate it immensely. Doing these sessions are a little bit new to me. I'm gonna get better at them. I want to get better at them. Matter of fact, I will get better at them. And I think I found, after my 60 plus years, I think I found my niche. And 30 years of taxes, and 60 years of living, and we all have a purpose. We all need to look for it and find it. I think I found mine. Mine is being a resource, because I know who my source is, but I'm a resource, and I want to be a resource to as many people that can hear this and make a difference in this one area of their life. And in this area, I have expertise. I am an expert, and to be able to give the information, educate people, inspire people. This is my mission in regards to tax planning and tax strategy in your tax life. So thank you for, if you've ever viewed this, thank you for viewing. We're going to move forward on these sessions. God willing, we're going to be presenting some other aspects of information and some products and some trainings and some other venues we're going to be reaching out to. But I'm making this my mission going forward to um, evangelize, if you will, the whole practice and nature of tax planning. Here's a question I want to leave you with. Okay, let's see. The question is, will you let the system, and let's say we'll call it the tax system, our tax system, control your wealth and your financial future, or will you control how it flows? Okay. I want to thank you for um, visiting us and being with us on the session. Um, and as usual, after every session is over, I like to ask you, what's your dream?